Welcome to our deep dive into the world of investment banking and its pivotal role in global markets. Investment banks are often seen as the engines that drive financial markets, connecting capital seekers with investors and facilitating complex financial transactions. In this video, we'll explore how these institutions operate, their influence on economies, and why their activities matter to businesses, governments, and individuals worldwide. By the end, you'll have a clear understanding of how investment banking shapes the financial landscape and supports global economic growth. At its core, investment banking is a specialized segment of banking focused on helping organizations raise capital and providing advisory services for mergers, acquisitions, and other financial transactions. Unlike commercial banks, which deal with deposits and loans, investment banks work with large-scale financial activities, often involving corporations, governments, and institutional investors. Their expertise lies in structuring deals, underwriting securities, and navigating complex regulatory environments, making them essential players in the financial ecosystem. Investment banking has a rich history that dates back centuries. Originally, these institutions emerged to facilitate trade and finance for governments and large enterprises. Over time, their roles expanded, adapting to the needs of growing economies and increasingly complex financial markets. Today, investment banks are global powerhouses, leveraging technology and expertise to serve clients across continents. Understanding their evolution helps us appreciate their current significance and the trust placed in them by market participants. Investment banks perform a variety of crucial functions. These include underwriting new securities, facilitating mergers and acquisitions, providing market-making services, and offering financial advisory. Each function requires deep market knowledge and analytical skills. For example, underwriting involves assessing risk and pricing securities, while advisory services demand strategic thinking and negotiation expertise. Together, these functions enable businesses to grow, innovate, and compete on a global scale. One of the most visible roles of investment banks is underwriting securities. This process involves helping companies issue stocks or bonds to raise capital. The bank assesses the value of the offering, sets the price, and often guarantees the sale by purchasing the securities themselves before selling them to investors. This service not only provides companies with much-needed funds, but also instills confidence in the market, as investors trust the bank's due diligence and expertise. Investment banks play a central role in mergers and acquisitions, guiding companies through the complex process of buying, selling, or merging with other firms. They provide strategic advice, conduct valuations, and help negotiate terms that maximize value for their clients. Their involvement ensures that transactions are executed smoothly and in compliance with regulatory requirements, making them indispensable partners in corporate growth and restructuring. Market making is another important function of investment banks. By buying and selling securities, they provide liquidity to financial markets, ensuring that investors can easily enter or exit positions. This activity stabilizes prices and reduces volatility, which is crucial for maintaining investor confidence. Market makers also help set fair prices for assets, contributing to the overall efficiency and transparency of global markets. Investment banks offer a wide range of advisory services, from capital-raising strategies to restructuring and risk management. Their teams of experts analyze market trends, assess financial health, and recommend solutions tailored to each client's needs. Whether it's navigating a challenging market environment or planning for long-term growth, their advice is highly valued by corporations, governments, and institutional investors alike. Today's investment banks operate on a global scale, with offices and clients spanning continents. Their international presence allows them to facilitate cross-border transactions, access diverse markets, and provide insights into global economic trends. This reach not only benefits their clients but also helps integrate financial markets, promoting economic growth and stability worldwide. Investment banks are key drivers of economic growth. By channeling funds to businesses and governments, they enable investment in infrastructure, innovation, and job creation. Their activities help allocate resources efficiently, ensuring that capital flows to projects with the highest potential returns. This, in turn, supports the development of industries and the overall prosperity of societies. Managing risk is at the heart of investment banking. These institutions use sophisticated models and analytics to assess and mitigate financial risks for themselves and their clients. Whether it's hedging against market fluctuations or designing complex derivatives, their expertise helps protect investments and maintain market stability, especially during times of uncertainty. Investment banks are at the forefront of financial innovation, leveraging technology to improve efficiency and create new products. From algorithmic trading to blockchain solutions, they continuously adapt to changing market dynamics. This commitment to innovation not only enhances their own operations but also drives progress across the entire financial sector. Operating in a highly regulated industry, investment banks must comply with a wide range of laws and standards. These regulations are designed to protect investors, ensure transparency, and maintain the integrity of financial markets. Navigating this complex environment requires specialized knowledge and constant vigilance, as regulatory changes can have significant impacts on their operation. Investment banking sector is dominated by a handful of major global players, including names like Goldman Sachs, J.P. Morgan Chase, and Morgan Stanley. These institutions set industry standards, influence market trends, and often lead the way in innovation and deal-making. Their size and reputation give them unparalleled access to clients and resources, reinforcing their central role in global finance. Most investment banks are organized into specialized divisions, each focusing on different aspects of the business. Common divisions include corporate finance, sales and trading, asset management, and research. This structure allows banks to offer a comprehensive suite of services, catering to the diverse needs of their clients and ensuring expertise in every area of finance. Corporate Finance Division is responsible for advising companies on raising capital, structuring deals, and managing financial strategy. This team works closely with clients to design solutions that align with their long-term goals, whether it's through public offerings, private placements, or debt financing. Their expertise is crucial for companies seeking to expand, restructure, or enter new markets. Sales and Trading Division connects buyers and sellers in financial markets, executing trades on behalf of clients and the bank itself. This fast-paced environment requires deep market knowledge, quick decision-making, and strong client relationships. By providing liquidity and facilitating transactions, this division plays a vital role in the smooth functioning of global markets. Asset management is another key division within investment banks. Here, professionals manage investments on behalf of clients, including individuals, corporations, and institutions. Their goal is to maximize returns while managing risk, using a variety of strategies and financial instruments. This service is especially important for clients seeking long-term growth and financial security. Research Division provides in-depth analysis of markets, industries, and individual companies. Their reports guide investment decisions, inform trading strategies, and help clients understand emerging trends. High-quality research is a cornerstone of investment banking, enabling both the bank and its clients to make informed, data-driven choices in a rapidly changing environment. One of the most high-profile activities of investment banks is managing initial public offerings, or IPOs. This process involves taking a private company public by issuing shares on a stock exchange. Investment banks guide the company through every step, from regulatory filings to pricing and marketing the shares. Successful IPOs can raise significant capital and boost a company's profile in the market. Debt financing is another important service offered by investment banks. They help clients raise funds by issuing bonds or arranging loans, often structuring deals to minimize costs and risks. This type of financing is essential for companies looking to expand operations, invest in new projects, or refinance existing debt. The bank's expertise ensures that clients secure the best possible term. Private placements involve raising capital by selling securities directly to a select group of investors, rather than through public markets. Investment banks facilitate these transactions, ensuring confidentiality and tailored solutions for both issuers and investors. This approach is often used by companies seeking flexibility and speed in their fundraising efforts. For large-scale financing needs, investment banks often arrange syndicated loans, where multiple lenders pool resources to provide funds to a single borrower. This spreads risk and allows for larger transactions than any one lender could handle alone. Investment banks coordinate the process, negotiate terms, and manage relationships among all parties involved. Investment banks are leaders in designing and trading derivatives and structured products. These financial instruments allow clients to hedge risks, speculate on market movements, or achieve specific investment objectives. The complexity of these products requires deep expertise, and banks play a crucial role in educating clients and ensuring proper risk management. Investment banking industry has become increasingly globalized, with firms operating across borders and serving clients worldwide. This globalization brings new opportunities and challenges, including navigating different regulatory environments, managing currency risks, and understanding diverse market dynamics. Investment banks' ability to operate globally is a key factor in their continued success. Facilitating cross-border transactions is a specialty of investment banks. Whether it's a merger between companies in different countries or a bond issuance in a foreign market, these deals require expertise in international law, tax, and finance. Investment banks coordinate all aspects, ensuring compliance and smooth execution, which is vital for clients looking to expand internationally. Investment banks are increasingly active in emerging markets where rapid economic growth creates new opportunities. They help local companies access global capital, advise on market entry strategies, and facilitate foreign investment. Their presence supports economic development and helps integrate these markets into the global financial system. Investment banks have played both positive and controversial roles during financial crises. While they provide stability and liquidity in turbulent times, their activities have also been linked to market bubbles and systemic risks. Learning from past crises, banks and regulators have implemented reforms to strengthen oversight and reduce the likelihood of future disruptions. Ethical conduct and corporate responsibility are increasingly important in investment banking. Banks are expected to act in the best interests of clients, maintain transparency, and contribute positively to society. Many institutions have adopted codes of conduct and sustainability initiatives, reflecting their commitment to ethical business practices and long-term value creation. Diversity and inclusion have become priorities for investment banks, as they recognize the value of varied perspectives and backgrounds. By fostering inclusive workplaces, banks can better serve a global client base and drive innovation. Many firms have launched initiatives to recruit, retain, and promote talent from diverse backgrounds, strengthening their organizations and the industry as a whole. Sustainability is a growing focus for investment banks, with many institutions integrating environmental, social, and governance (ESG) criteria into their operations. They advise clients on sustainable finance, support green projects, and develop products that promote responsible investing. This shift reflects a broader commitment to long-term value and positive societal impact. Strong client relationships are the foundation of investment banking. Banks invest significant resources in understanding client needs, building trust, and delivering tailored solutions. Long-term partnerships enable banks to anticipate challenges, offer proactive advice, and support clients through every stage of their financial journey. Success of investment banks depends on the talent and expertise of their people. These institutions attract top professionals from diverse fields, including finance, law, technology, and analytics. Continuous learning and development are encouraged, ensuring that teams stay ahead of market trends and deliver exceptional value to clients. Technology is transforming investment banking from digital platforms to artificial intelligence. Banks are investing in new tools to enhance efficiency, improve client service, and manage risk. These innovations are reshaping how deals are executed, data is analyzed, and markets are accessed, positioning investment banks for future growth. With increasing reliance on technology, cybersecurity has become a top priority for investment banks. Protecting sensitive data and ensuring the integrity of transactions are essential for maintaining trust and compliance. Banks invest heavily in advanced security systems and protocols to defend against cyber threats and safeguard client information. Digital banking services are now integral to investment banking. Clients expect seamless online access to accounts, real-time data, and digital communication channels. Investment banks are responding by developing user-friendly platforms and mobile apps, making it easier for clients to manage their finances and access expert advice from anywhere in the world. To stay competitive, investment banks are partnering with fintech companies to harness new technologies and deliver innovative services. These collaborations enable banks to offer enhanced products, streamline operations, and reach new client segments. Fintech partnerships are driving the next wave of transformation in global financial markets. Data analytics is revolutionizing investment banking by enabling better decision-making and risk management. Banks use advanced analytics to identify market trends, optimize portfolios, and personalize client services. The ability to harness big data gives investment banks a competitive edge and supports more informed strategic choices. Client-centric approach is at the heart of modern investment banking. Banks strive to understand each client's unique goals and challenges, delivering customized solutions and proactive support. This focus on client needs builds loyalty, drives business growth, and sets leading investment banks apart in a competitive industry. Influence of investment banking extends far beyond individual transactions. By facilitating capital flows, supporting innovation, and promoting financial stability, these institutions have a profound impact on global economic development. Their activities shape industries, create jobs, and contribute to the prosperity of nations around the world. Despite their strengths, investment banks face significant challenges, including regulatory pressures, technological disruption, and changing client expectations. Navigating these challenges requires agility, innovation, and a commitment to continuous improvement. The most successful banks are those that adapt quickly and embrace change as an opportunity for growth. Looking ahead, several trends are shaping the future of investment banking. These include increased digitalization, greater focus on sustainability, and the rise of alternative investments. Banks that anticipate and respond to these trends will be well-positioned to thrive in an evolving global marketplace. Adaptability is essential for investment banks in a rapidly changing world. Whether it's responding to new regulations, embracing technological advances, or meeting evolving client needs, banks must remain flexible and forward-thinking. This adaptability ensures their continued relevance and success in the global financial system. Summarize, investment banks are vital to the functioning of global markets. Their expertise in capital raising, advisory, and risk management supports economic growth and innovation. By adapting to new challenges and embracing technology, they continue to play a central role in shaping the future of finance. Understanding their functions and impact helps us appreciate the complexity and importance of the financial system. Conclusion, investment banking remains a cornerstone of the global financial system. Its ability to connect capital with opportunity, manage risk, and drive innovation ensures its ongoing relevance. As markets evolve, investment banks will continue to adapt, shaping the future of finance and supporting prosperity worldwide. Thank you for joining us on this exploration of investment banking's role in global markets.